Here is a summary of Unity's Q2 2026 earnings call transcript, overall performance, and sentiment. Unity reported what they described as arguably the best quarter in Unity's history as a public company. Management expressed strong confidence in the company's transformation, driven by a flywheel of AI, product velocity, and customer focus, positioning them for significant growth in the AI era. The focus has shifted from looking backward to future potential. Key financial metrics: Q2 2026 strategic revenue growth, 38% year-over-year. Strategic grow revenue, $329 million, up 63% year-over-year. This growth was heavily influenced by Unity Vector. Strategic create revenue, $157 million, up 14% year-over-year, excluding a prior year one-time item. Growth driven by average revenue per user, ARPU, increases, price adjustments, minimum annual commitments, and strong performance in China. Adjusted EBITDA, $160 million. Adjusted EBITDA margin, 29%, representing an 800 basis point expansion year-over-year. This was attributed to rapid revenue growth, high gross margins, and disciplined cost management, leading to significant operating leverage. Free cash flow, $202 million, an increase of 59% year-over-year. Cash balance, $2.36 billion, resulting in Unity moving from a net debt to a net cash position. Stock compensation expense, down 25% year-over-year, representing 14% of revenue, its lowest level ever. Unity Vector, performance marketing, highlights, exceptional growth. Quarter-over-quarter growth was 23%, nearly double the expected 12 to 13%. This momentum is carrying into Q3. Annual run rate. Unity Vector has surpassed $1 billion in annual run rate, 2 quarters ahead of schedule. AI-powered improvements. Over 20 major updates were executed in Q2, enhancing AI prediction capabilities, integrating new runtime data, and improving game retention analysis. Day 28 RAS. This new product, launched in Q1 and fully rolled out in Q2, saw campaign spend grow nearly 3x. Over 25% of the advertising base has adopted this strategy, driving strong performance. Runtime data integration. For the first time, signals from the Unity runtime, connecting to 3 billion monthly players, were incorporated into Vector AI models, showing encouraging early results and identified as a deep, sustainable competitive advantage. Strategic grow business. Fueled by Vector's performance, this business saw a 63% year-over-year increase, with Q3 outlook pointing to an even stronger 70% growth rate. Unity Create, game development platform, highlights, Unity 7 announcement, a new generation of software designed for an open, collaborative platform where developers, artists, and coding agents work together. Key features include a free master control program, MCP, and open API for programmatic control and integration into existing workflows. Automated configuration. Downstream revenue-enabling services like Vector, Commerce, and live game operations are now configured automatically on day 1 with Unity 7. Potential impact. Unity 7, with a beta release in Q4 2026 and full release in Q1 2027, is expected to be the most exciting and impactful release in the company's history, expanding the top of the funnel for interactive entertainment creation. Netflix partnership. A significant multi-year deal to comprehensively support Netflix's multi-platform games ecosystem with the Unity engine. This partnership exemplifies Unity's role in supporting innovative consumer experiences, like Netflix's social gaming without downloads. Management's forecasts and outlook. Q3 2026 guidance. Strategic revenue, $540 million to $550 million, 44% to 47% year-over-year growth. Strategic grow revenue, 68% to 70% year-over-year growth, driven by Unity Vector. Unity Vector sequential growth, 19% to 21%. Strategic create revenue, 7% to 10% year-over-year growth. Non-strategic revenue, $20 million, including July contribution from Supersonic. Adjusted EBITDA, $185 million to $190 million, 33% margin, 69% to 74% growth. Adjusted EBITDA margin expansion, expected to be up 400 basis points in Q3 from Q2 and 1,000 basis points year-over-year. GAAP net income profitability, pulled forward from Q4 2026 to Q3 2026. Significant risk factors. While not explicitly detailed in the provided text, the transcript notes that forward-looking statements are subject to risks, uncertainties, and assumptions, and refers to the Risk Factors section of our filings at sec.gov. Highlights: exceptional Q2 financial performance with best quarter in history. Unity Vector's explosive growth and rapid scaling to a $1 billion plus run rate. Successful integration of runtime data into Vector, seen as a key competitive advantage. Launch of Unity 7 and its potential to transform game creation. Key strategic partnerships, notably with Netflix. Significant margin expansion and operating leverage. Achieving net cash position and pulling forward GAAP profitability. The flywheel concept gaining traction and demonstrating positive results. Lowlights. No explicit lowlights were mentioned by management. The tone was overwhelmingly positive and focused on strong execution and future potential. Most important statements from management. CEO Matt Bromberg. 2 years ago on this call, we told you that a rededication to our customers' needs, more disciplined execution, and sharply accelerated product velocity would transform our company, and we did. Today, after what was arguably the best quarter in Unity's history as a public company, we're done looking backwards. The flywheel we've been constructing is spinning up, and we expect it to power us into the ranks of the most consequential companies of the AI era, and it will. AI has already become the most crucial driver of our product velocity and quality, and is also well on its way to becoming our most crucial driver of demand. On Unity 7, we believe Unity 7 holds the potential to be the most exciting and impactful release in our history, and that it points the way to a fundamentally different future, one where the top of the funnel gets bigger and bigger to accommodate the increased interest in the creation of interactive entertainment. On the flywheel, more games, more platform usage, more discovery, all driven by the unique understanding that we derive from the approximately 3 billion people each month playing a game on the Unity runtime. We expect to have our cake and eat it too. Referring to growing revenue and profitability simultaneously. CFO Jared Yaz. Unity delivered a truly exceptional second quarter with strategic revenue growth of 38% and adjusted EBITDA growth of 77%, along with record margins. Rapid revenue growth, high gross margins, and disciplined cost management resulted in significant operating leverage. Unity had $202 million in free cash flow in the second quarter, an increase of 59% year-over-year. This brings our cash balance to $2.36 billion, with Unity flipping from a net debt position to a net cash position this quarter. We're guiding to third quarter adjusted EBITDA of $185 million to $190 million, implying adjusted EBITDA margins of 33% and adjusted EBITDA growth of 69% to 74%. We're pleased to report that we're pulling forward our expectation for achieving GAAP net income profitability from the fourth quarter of 2026 to the third quarter of 2026. Unity is blessed with structurally high contribution margins. If you look at our adjusted gross margin, they've been about 82%, up to 83% in the second quarter.